Welcome back. On today's class, I will be discussing on market psychology part 2. On the previous class, we have elaborated on so many things about the forex psychology. Now, I'm going to be continuing the class, although this class is going to be a very short class, but it's a very rich class. Okay, we define forex and market psychology, which can be defined as a way forex traders perceive the forex market, or the way traders look at the market before considering to enter the market. Okay, but before we continue, I want you to understand that a trend is made up of candlestick, and a trend is made up of a swing. Okay, you must know how to connect your swing very well. This is a swing. I went up to say that we have two types of swing. We have impulsive swing and we have corrective swing. Okay, we have what? Impulsive swing and we have a corrective swing. And it is stated that a swing must have at least 6 candles inside it. At least 6 candles. And your swing must be connected to the most significant highs and the most significant lows within that direction. So if I should connect a swing in an uptrend, what makes up an uptrend is higher highs and higher lows. You must first of all know how to connect your swing to be able to look out, because it is a swing. It is the candlesticks that make up swing. Remember, you must have at least 6 candles. 6 candles must at least be with a swing for you to consider, okay, this is a swing. It is up to swing. If it's not up to 6 candles and above, you can't consider it as a swing. If I should connect a swing, there was a rule that have been stated that for you to consider a trend, an uptrend, you must have what we call higher highs and higher low. Remember, this is the last swing, the most significant low. Okay, so this is the lowest peak of this downtrend. Remember, this is a downtrend. The market has been coming down, so this is the lowest swing, and we are expecting this swing to be lower than this, but it refuses to be lower than this. Okay, the next thing is that it started going up. But how do you know, and where do you know that this market have started changing? First, you must establish that the previous swing is a downtrend, which is the last swing that formed. Remember, this swing created this pullback. This is a pullback. Now, this pullback end up becoming a reversal. So look at it. And when this pullback was created, it refused to go lower than this to continue the successful downtrend, but it fails to go. It was just like this. It formed within this level. Okay, this is a swing. Okay, now in a swing, it is through the swing that you will know if the swing is healthy or if the swing is not healthy. Okay, number one thing is that you look at what make up the swing. It is the candlesticks that make up a swing. Remember, I said a swing must have at least 6 candles and above. If a swing is not made up of 6 candles and above, you cannot consider it as a swing. That is what we know. Now, we now have two types of swing. We have impulsive swing and we have corrective swing. So Now, we want to know why this particular swing refused to go lower. Look at this particular swing. If you look at the momentum of this swing was so strong, because if you look at the candlesticks that make up the swing, they are very gigantic. Well, why did this particular swing refuse to make the same move just like the previous one did? That is where market psychology come in place. Because some people don't know that in a trend, there is a swing. We have pullback swing, we have men's swing. Men's swing is this one, like from here to here is men's swing. Then from here to here is pullback, corrective. Okay, so now how do you know when a market is about to end? This is what many people don't know. You know, we are taught about candlestick, and believe that candlestick is a reversal pattern. No. Candlestick is not active until the system says so. If the system say that the candlestick is not active, that means it's not active. Sometimes candlestick might form and it end up not being active. If you go through our previous class, you saw where I stated that candlestick become active when the system confirm it. Okay, so candlestick can appear at the middle of a trend and it end up is not active. Okay, so now let's look at why this market refused to change trend. Remember, number one thing that make a healthy candlestick is a healthy trend is when the candlestick is approaching the support level, or resistance level, it's supposed to have increase in supply. Just look at this particular candle here. Why this candle break this? Here has always been a support level. Okay, now let us look at why this particular candle broke this level. This is supposed to be the support level. This is the place. Let's say this is the place. For ages, market has been struggling here. Well, why did this particular swing broke here? If you look very well, you notice that the candlestick has been increasing in supply. Look at it. From here, it was, let's say here is 50 liters. It reduced to 25 liters. Market managed to rise up. You saw a strong rejection. Okay. And then the next one, it added up to 40 liters. The next one, it's almost to 25 liters. But look at when the market started approaching the support level, it increased from 5 liters to 150 liters. From 150 liters, it pulled in to 200 liters. I'm using liters as a scenario. Now, if you look very well, you see that there was increase in supply as price was coming closer to the support. That was why it broke. It broke that support. It gathered enough momentum to break the support. Good, no problem. So there was a struggle by the buyers. They tried to break this thing. They could not the first time. They try again, they could not. So they gathered momentum and broke it. Okay, breaking it and start going up and made the correction move, which is the pullback that we have been talking. This now, we are expecting that these sellers will continue pulling down and keep pulling, because they have already broken the previous lows, okay, this support level. But suddenly they did not have enough strength. They have been struggling to break it. It's not easy. Okay, now look at what happened here. As this was the last swing that it made, if you look very well, this was the most powerful swing it made to break this level. Yes, which it did, and it pulled back. Then returning back to where it stopped, it's becoming issue. If you notice, there was a weakness in supply. Once the market start coming closer, it has a supply, but eventually it formed what we call morning star, okay, and went up again. okay? Then this time around, coming closer, the candlestick begin to get weaker. It shows weaker. I can't compare the strength of this particular candle to the strength of this candle. So as a professional trader, when you spot a reversal candlestick pattern, the first thing you should be thinking of is you look out for 2 to 3 candlesticks behind it. Okay, let's say this is a downtrend. Okay, this is a downtrend, and a tweezer bottom formed at this place. And remember, this place is a significant level. Okay, then you spot a tweezer bottom. These two twins is a bullish tweezer. And after this bullish, this tweezer, you look out for candlestick reverse. You look out for the candles that are behind it. At least we are giving, that is the system. Looking backward is like looking at the system. Looking at the system will tell you if the system is healthy or not. Now, how do you know that the system is healthy or the system is not healthy? The swing is what we are calling the system. Remember, it is a swing that make up a trend, okay? And then candlestick make up swing, okay? Now, you want to know if this swing is healthy. If the swing is not healthy, it means that that is the last swing in this trend, in this downtrend. Look at it. This particular swing is healthy, okay? If you look at it, and it now pull back. He made a pullback. One, healthy pullback. If you look at the swing on the pullback, very healthy, okay? But when the swing to pull down start coming down, the swing, this particular swing became unhealthy, because after the market start coming closer, the candlestick begin to reduce in volume. Not just, it's not like the previous one that when it was coming closer to the support level, it gathered momentum. After the first time it did, it reduced, it pulled back. First thing, it created a swing. Yeah, look at the swing, the rejection. It couldn't gather enough momentum. So it's okay, let us pull back and try to see if we can drag this price down. When they pull back, when they are coming down, you start noticing that the candlesticks are reducing in supply. The bearish candle, the selling candle, which is this particular one, we are reducing. Not the next thing is that there was a weak candles behind the support level. The candlesticks that are very close to support level are very weak. Okay, now because the candlestick close to this powerful support, because you need a strong candle to be able to break. Look at this candle. You see this support is not a child's play support. Okay, this support was once a resistance, don't forget. So this particular support need a momentum candle, a very healthy candle, and this would have been possible if there was another candle that will keep pulling down. But suddenly there was a pullback, and the pullback that happened is a very strong bullish candle. That means the buyers are very strong at this level. Now, after this candle reversal pattern appears here, you now look back, you now see, after this candle reversal happened, can I look at for 5 candle or 2 candle behind to see if they are very strong before this candle? Look at it. This is not a strong bearish candle. This is not a strong bearish candle. This is, look at all the candles behind it, very weak candles. So therefore, you can then determine, you can then confirm that truly this is the last powerful swing that was created for a sell, right? For this sell, that for this selling trend. Now you can then confirm that this particular reversal candle, which is called pause, might generate a reversal direction. So that is why this market could not swing down again and suddenly look at, just notice, remember here is a support level and resistance level. It's a significant, look at it. Here is a very significant level. If you look very well, market has always been struggling here. But what happened is that the more the candlesticks are getting closer to this place, you notice that they are gathering momentum. Even the bearish candle could not be able to break here. That is how the market struggled, and broke this place. And if you notice, the strength of this swing, the first swing, is very healthy, because if you notice where the candlesticks here are very strong before this particular reversal candlestick form. If you look at it very well, look at the candlestick that got to this place. Now, this particular candlestick, 1, 2, 3, is known as evening star. Okay. Then when you look back, you will look at 5 candles behind. 1, 2, 3, 4, 5. If you look at from here to this place, you notice that the people that have more momentum candle are the bulls. That is why this particular reversal candle only created a pullback, not a reversal. Okay, so the thing you know, if it is a normal forex trader, he will just look at the reversal candlestick pattern. He will not consider the candlestick that formed behind it, because it is the candlestick that formed 5 candlesticks that form behind it that will not tell you, oh, this market is weak, oh, this market is strong. Okay, look at this reversal candlestick. Look at this particular one here. Okay, 1, 2, 3, 4, 5. Do you notice that they are weak from here? 1, 2, 3, 4. This one, 5. Very weak candles. Okay, did you notice it? That is why the strength of the market could not be able to. Assuming there was a very big, 2 strong or 3 strong candle, bullish, bearish candle inside this 5 candle behind, you would have considered, oh, this market might not. But in this scenario, the market is at the support level, and yet the candles that's supposed to be very gigantic, with closer to the support level, they are all weak. They are not like this side that we are very strong. Look at this particular place now. I can call this this particular one harami, bullish harami. But if you look behind, 1, 2, okay, 3, 4. If you look behind, there are gigantic. That was why the market was able to even come down to this level, and also struggle again to come down here, but they could not break the level. So you as a trader, whenever you are trading, you spot a reversal candlestick. The first thing you should be looking at is that, where is this reversal candlestick forming? Is this truly forming at a support and resistance level? So how do you know if the place is when you look at the back place? Okay, you look at a very significant level. You can use here because there is more touch within this level. Okay, look at markets always struggle at this place. Okay, market always struggle here. Number one, if you trace very well, you will know that this place is a very strong level. Look at it, see it, market struggle here, market struggle here. Look at it, you see it, this zone is a very, when you say level, it's psychology. This is a psychological something where many people believe that that place is a very powerful place. Like I have said in the previous video, that the place where they refer as support, and it's based on psychology. Okay, not that there is a rope there that said here is a support. No, is psychology. Okay, so your strategy, risk management, your doubt, fear, FOMO, nervous, greedy, etc. does not contribute to what is market psychology. They only contribute 1%. So this thing that I am teaching you now is what we are calling market psychology. You look at the strength of the market. All those things that we are taught in the traditional institution of forex. Hey, your strategy, you should have a good strategy, you should have a good risk management, reward ratio. These are personal psychology. Doesn't affect. If you want to know how to ride the market, you must learn to to follow the institution. Who are these institutions? The institution are the market makers, the big bank, the government, the central banks, the big companies, the people that make decisions. They are the people that determine the price. They are the people that control the price. So you follow them. If you know how to follow them, then you will become a successful trader. Because me and you, our money, we don't have enough money in the market. But these big boys, they can come in and push in. That is why we are able to drag this price from here to here. Look at the body. These are the market, the institution. So if you want to analyze the market, you must always follow what the institution, the system is saying. And what the system is saying is the candlestick of the higher time. Okay, you don't use daily time, 1 hour or 30 minutes to look at this kind of thing. You use higher time frame because that is a longer view, so that it will help you to make a better decision. Okay, a reversal will become very active. A pullback pattern, a reversal candlestick pattern, or we call it pulse pattern, become very active when it forms at a support and resistance level. It becomes inactive or less active when it form when it form in a level where there is no support level. Okay, that is, it becomes very inactive. Look at this place. See this place. You see this place? You see this candlestick? This is a shooting star. Did the market go pull back? No. It just made a little down and then market continue. Okay, and then market, look at this candle. This is a shooting star. But this same shooting star, this same reversal pattern occurred there. Did you see how it go? Because this particular place it formed is a strategic place. And before, just like a car that is driving, when you are closer to a filling station, you must go and fill in your tap, your tank. This is what is happening. The car make a move from here and got to this place, pull back, make a move, start from this journey, start moving, and broke here, keep moving, and got to this place. This place is a resting place. For those of you who are traveling by air, by this, there is a place you get your flight to stop and then rest, or maybe people will refresh, or just to the same thing. This is what is happening here. So where your reversal candlestick pattern appear matters a lot. Now, if your reversal candlestick like this is a one evening star appears, okay, 1, 2, 3, okay, then how do you know if this evening star that appears is going to be a pullback? It is the system. You look at the candlestick, at least 5 candlesticks behind, that will determine if the strength, because if the strength of the trend is still healthy, that means this pullback is just going to create this reversal candlestick pattern will only create a retracement. It will not create a pullback. Sorry, it will not create a reversal, because there is a health. This swing is healthy. It's not a weak swing, just like what happened here. If you notice very well, when this reversal pattern happened, count candlestick 1, 2, 3, 4, 5. It's very weak swing from here, from this place to this place. Look at the candlestick after the reversal pattern. Look at the candlestick behind, very weak. But look at this particular one. This is evening star, 1, 2, 3. Okay, then you start from here, 1, 2, 3, 4, 5. Did you see that? From here to here, are you not seeing a healthy? That is why the market just made a pullback. Okay, trying to touch the previous support level. You know, here was a support level, a resistance and support level before the market broke it. Remember, it broke it, and now it's now a edge for it to be, because it need momentum to. That is why it need to pull back to gather momentum to be able to break here. Okay, so many traders, many retail traders do not know how to weigh the strength of a swing before thinking, oh, this swing is good. They just know that, oh, market has gotten to support and resistance level, and then market is about to reverse. They don't know if it is going to be a reversal pattern or if it is going to be a pullback. Okay, they don't know. They just know that a reverse. Some of them self, they believe in a reversal pattern. They say, oh, this candlestick reversal pattern, hey, it has formed. Oh, it has formed. I think market is going to. No, 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 no. Now look at this market here. Let us give a scenario here. Now, after this pullback occurred, okay, shakeout. After this pullback occurred, another reversal pattern appears here. This is called harami, engulfing. This 1-2 appears. Just study this 1-2 candle is mother and child, which is engulfing. Then look at the 5 candlestick behind it. 1, you saw the weakness. The candlestick are weak. Then there was a bullish candle. Let's count. 1, 2, 3, 4, 5. Look at their weak. More rejection is telling you that the buyers are more in the market. If you see the candlestick behind are so weak that they are unhealthy. Unhealthy. The bearish candle are unhealthy because they don't have enough strength to be able to push the market. Look at what happened. The market managed to go down to this level. The bullish people pull it back up. Then this same thing happened here. The bullish people pull it back up. At the end of this class, you are able to understand that what determines the market is the institution. If you learn how to follow the institution, which is the system, you will not have any issue. Okay, as a trader, you should learn how to follow the institution. Who are the institution? The market makers, the big banks, the government, the large institution, the companies like Warren Buffett. These are the institutions. They make decisions, we follow them. There is a parable that says, once you learn how to follow the trend, you have peace of mind. So as a trader, you should be looking out for the strength of a swing before you consider a pause pattern. A pause pattern is a reversal candlestick pattern. Okay, so when you look out for a pause pattern, when you spot a pause pattern, which is a reversal candlestick pattern in for a layman understanding, if you spot a pause or a pause pattern, first thing you should be asking for, where did this pause pattern appear? Did it actually appear at a significant support and resistance level? If yes, if no, just shun that pause pattern. You can shun it because that pause pattern is not healthy. It didn't appear at the support level. Then another thing again that will make you to confirm fully is looking at the trend of the strength of that swing. Remember, candlestick reversal pattern form in a swing. Okay, now this particular swing is weak. That is why look at these two swings and tell me if which one is more swing, is weak. This is a selling swing and this is another selling swing. Now look at them. Which one is healthier? This one is the healthier. The most recent one is weak. That is why the market reversed. Okay, but how do you know that this particular swing is weak? It is after the formation of reversal candlestick pattern. You then start watching the candlesticks that form before this reversal candlestick. If they are showing sign of strength, like the weak, they are, look at the, if you look at this particular swing, you see that though there was a strong rejection here, this rejection is up to, is more than the body of the candle, and there was a strength here. But this rejection, 1, 2, 3, 4, 5, has already shown that the strength is, the market is making its last move. Okay, the momentum is fake because this particular candle, I know it's a strong candle, but it just show this last strength. Because if they were truly healthy as they claim, they would have broke this particular swing, would have broken it. Okay, to tell you that the strength is, because they just made their last um, down, and then the buyers took over. But you look at the healthiness of the market, this thing would have happened here. What happened here would have happened here, but because the sellers need to perform their last move before, then they now perform, the market pull back. So returning back, they could not go back to this place again. They could not break the previous, the support level that market has been struggling. They could not. That shows that this particular break was fake. Okay, they were just trying to tell the world, oh, we are who we are not. Okay, so the second momentum they could not gather enough momentum to break it. But looking at the swing is showing that there was a lot of weakness. The candlestick, we are getting weaker. Okay, if you look vividly, after this tweezer bottom form, which is bullish tweezer form, now if you look very well, you look at the candlesticks that are behind it, 5 candlesticks, 1, 2, 3, 4, 5. You see that at least from here to here, there is, if you look at their swing, that their swing low, the shadow, you see that there is high rejection, showing that the buyers are fully here. Then that was why, because assuming the swing was very healthy, once the market is coming close to this support, you will see it will gather momentum like the previous one to break it, but it could not do that. It could not do that. Even when it tries to break it with this particular candle, did you see what happened? The candles, the buyers rejected it and ended up closing this candle in a bullish pattern. So by the time you must have seen that the strength of the market is weak, you can then say, oh, this market, like here now, if you notice the same thing happened, this is a support level, the same thing here, so this is a resistance level. But to look at the candlestick behind, you will notice that the candlestick behind are healthy, their strengths are very powerful. That was why, yes, this pulse pattern, which is this evening star, will pull back, but it will not metaphors into reversal, because the strength of this market is still alive. If you study another one after the pullback, if you notice very well, that's to tell you that sellers are weak. If you notice after this engulfing pattern, look at what happened here. 1, 2, 3, 5 candles, the bearish are weak. So the market resume and start going up again. Look at again. At this point, before this market pullback, this is the swing that it's this is shooting star. But if you look the 2 candlestick behind, you will notice something, that the momentum of the candlestick we are improving before this shooting star occurred. This shooting star that occurred was what triggers this thing, but not the shooting star that is. If you look at the candlesticks that got to the point of this support level, they were very healthy, if you look at it, and that was what triggers this pullback. Okay, this pullback, then from here again, market starts going up. But there is something that happens. Why this market is going up here, it get to a point where it need to change trend. But study something. The candlesticks, after, this is a support, a resistance, a very powerful zone. So before you ask, you can just take your line and draw like this. Then after you draw it, you then start tracing back to know whether this place is a very powerful area, or you can add a higher time frame to tell you where this particular place is. You will see that that place is exactly powerful zone. Well, what happened is that you then saw evening star 1, 2, 3. This is evening star. Then you now start checking the candlestick behind this reversal candlestick pattern. Now say, okay, 1, 2, 3, 4, 5. Look at the candlestick. You notice that they were decreasing in supply. Look at the wick here. Look at the wick, this one. Look at the wick here. Okay. Then suddenly a bearish candle drag everything down. Then the next candle behind it is very weak. So with this, you can then say truly this market is going to reverse. And it's achieved that aim. Did you see how far the market went? It went down here. Now this down here is telling you that the market, look at the main swing. This is the main swing. How come this is the main swing and this is the pullback? Look at how deep the pullback. This is the swing and this is the pullback. The pullback is supposed to end there to show her healthy. Yes, the buyers are still in charge, but the pullback could not. They tried to pull up to this level. There was a strong rejection, and you saw the level in which the market swing down. Okay, it swing down here, and the bullish struggle again to make up. That is their last chance. The market starts changing again. Now look at this place again. This place is also, all of them, they are the same zone. Look at this place. There was a rejection here. There was a rejection here. No problem. Now this is evening star 1, 2, 3. What show? 1. This is, okay, this is an engulfing chart pattern. This is a bearish engulfing chart pattern. Okay, let's use that. Then you now look 1, 2, 3, 4. Okay, 5. Now, if you look very well, you see that the bearish are challenging at the top. At the top, the bears, the sellers have more candle. They are competing. And if you look at the body of the bearish candle and the closed body of you see that the bearish candle is gaining more strength. Okay, with that alone, you can then say the market is at a peak of reversal. Okay, so the system, you personally, you should be considering the system before making a decision to know if the market is going to be a reversal or a retracement. Many retail traders do not know about this. Okay, so when a reversal candlestick pattern appears, the two different things between a professional trader is that the reversal candlestick, a retail trader just see it, a normal retail trader say, oh, reversal pattern has appeared, though it appears at a support level, but they are not looking at the strength of that swing. Because sometimes you see a reversal pattern and you think this market is going to do this thing, the next thing is start going up, because the strength of the swing is what determines if the pulse pattern will pull back very well. And the position where the pulse pattern form, sometimes pulse pattern might form at the middle of a trend. Okay, for pulse pattern forming at the middle, look at what happened here. If you look at there, this is a pulse pattern, an engulfing pulse pattern. That was why the market could not go up further. It did not go very further. But look at, you see something here. You see this place here, within this place, just check out. This is a significant support level. You will see that the pullback was healthy. Okay, you see this. This is a significant level. Okay, that was why this particular harami, did you see the pullback it made? It made a very wide swing pullback. Well, look at this one that did not form at a very good strategic point. Now, it did not make that. This is so sometimes reversal pattern might form. It might not give you an active response to compare with the one that form at a support level. Why did this trend? Why is it that this particular trend, trend you are seeing here, did not? Why is it that it did not reverse? One is that the healthiness of the swing from here to here is what determine now. This is an Arami, mother and child. Okay, now look at the 5 candlestick behind it. Okay, 1, 2, 3, 4, 5. Look at within this 5 candle, which candle is the most biggest? This is the candle, followed by this. So you see that there was increase in supply, even close to the candle that formed the Arami, there was increase in supply without no much weak. Okay, so the strength of this thing, the candlestick, the strength of the system is what determines. Remember, a swing is made up of candle. Okay, and how many candles should you consider in a swing? At least 6 candles you should consider in a swing. So I believe this market psychology is very important. The market psychology will help you to know what the institution is thinking, where the institution is thinking. Are they thinking to go up or to go down? But if you don't know the institutional way of thinking, you will be following the candlestick reversal pattern, knowing very well that the candlestick reversal pattern do not have say. The candlestick reversal pattern is active based on where it is formed and based on the strength of the market. Okay, if the candlesticks form at a support level and also the strength of the market is very strong, it ends up creating a pullback. But if in a situation whereby the candlestick form at a support level and then the strength of the market is weak, it therefore creates a reversal pattern. So the other one that is strong creates a pullback, while the other one creates a reversal pattern. So now, how do you know that this is a significant support and resistance? Let me say that before, let's say that here, before, let me find a better scenario. Okay, now, right now, market is going up. Here have not formed. All this way from here have not formed. So from here have not formed. Now, I want to know, since market has eventually start coming up, where is going to be my targeted take profit? I will look back and say, where is the most significant resistance level? Where is going to be the, I now use here. You see, I can use here and check, but I cannot only base it on only because of this place. I will then target, see the most closest one here. This is the place. This one is the most closest one. Okay, you see it. The most closest one is see this particular place. So as this market is coming up, I should set this place as the most closest one. But looking at the candlestick that is going closer, as the candlestick are coming closer, they are increasing in supply. They manage to break it. Okay, they manage to break it. So here become my net target as my next step profit. So this time around, you see the strength of the market, but it doesn't mean that the market is weak. It means that the market wants to have some break before it continues. That is why if you look at the candlestick behind, it is the candlestick inside 5 candlestick behind, and 3 managed to be on the side of the original trend, and they are very strong, and 2 became weak. You can then consider that, oh, this market is just a pullback. But one in a situation whereby the 5 candle behind that reversal candlestick pattern, that they are bullish, no, though the market is going up, but they are very weak. They have small body and very long tail, small body and very long rejection. You can then say, oh, this market is weak, this swing is weak. I hope it will not. Then you now start, if you have been thinking of continuing your buy, you can close your trade because you know very well that this weak swing is going to, there is 99% chance that the market is going to reverse. So understanding the system helps you better. Not everybody that knows this. So you are lucky to be in this master's class. Okay, so I hope you have learned this, you have learned a lot from this class. If you don't understand, repeat it and repeat it and practice. Practice makes you a better trader. You practice and keep practicing until you begin to observe each thing. This thing I'm teaching you is what I am using, is what 99% successful traders are using. So when you hear some people say, I don't trade with charts, I don't say, yes, indicators are good. They are very, very good. But without it, now when you must have confirmed, then you can then use maybe indicator to begin to know where to actually, maybe with your strategy, Dow theory strategy, riding a straight river, to know where to enter for buy, because you have already looked at the market in a higher time frame. You have seen what is it will end with, and you are now looking out for a place to enter with lower time frame. You can use 1 hour using Dow theory. You can use the running a trend strategy. There are so many trust strategy out there you can use. But the most important thing is understanding the system. When you understand the system, you can then enjoy your strategy. Okay. Thank you once again. My name still remains Kujosi, the admin of CJ Forex. Have a nice day.